Oracle's recent earnings report highlights a slight revenue miss for the second quarter, but overall performance was considered in line with Wall Street expectations. This is despite the Oracle Cloud Infrastructure segment demonstrating an impressive growth of 52%. Now, with Research Manager Director and Head of Software Research Alex Zuken joins Market Domination Overtime hosts Julie Hyman and Josh Lipton to examine the print and stock reaction.
Forward-looking indicator in many quarters. Now, what I will say is that number had been going up pretty unbelievably, would be the only construct that I could tell you, over the last 6 quarters. I'm just looking at my model here. I don't remember. I haven't seen that number go down, but at the same time, that number ticked up by $30 billion between Q2 of last year and Q4 of last year. So the uptick was pretty seismic. The number that we were really paying attention to was IaaS, or OCI, Oracle Cloud Infrastructure as a Service. That number, 52%, very solid. The deal with Meta, also another indicator of seeing great partnering opportunities for Oracle. They've done deals now with Microsoft. They've done deals with Google, with AWS, with Meta. So they're kind of locking in, a lot of that AI mind share. So net, it's going to come down. I think the stock reaction is more indicative of how people are positioned. There was a lot of people that are long Oracle, and so we'll see kind of what the guidance entails.
To your point, Alex, listen, heading into this print, stock was just red hot, right? Up 80% year to date. I'm curious, Alex, do you now consider Oracle to be the fourth hyperscaler? Obviously it's been Amazon, Microsoft, Google. Do you think, in your opinion, have Larry Ellison and Safra Catz, have they now successfully muscled their way in there?
I would say for new workloads, for AI specifically, I think it's hard to make the case that they're not. I think they're right up there making some of the smartest deals with NVIDIA, with, Larry's great friends with Elon. I think there's concepts around how well positioned they are with the new administration, how well connected they are globally with companies that are looking to make transitions to the cloud for the first time and maybe deploy AI in a not necessarily all cloud modality and looking to be hybrid. So I think they're really well positioned, and they've got the chips, they've got the right architecture, they've got experience in commercial engagements, they got a really wide breadth of products and solutions that they can bring together, and they're showing the street that growth can continue to accelerate.
So do they have to do anything differently, Alex, or do they just sort of keep on the same trajectory here as we get into the new year? Because, if they keep putting up numbers like this, either the street's going to have to adjust or they're going to have to push it a little more, maybe.
Well, look, I think they had an analyst day and they gave targets all the way out to fiscal 29. I think that, they're now talking about double-digit CAGR in the teens for earnings going all the way out there. I think over the next couple of quarters, there's the potential for accelerating growth. There's the potential for better infrastructure and OCI growth as well. I think having a 5 on the IaaS number is a big deal. Honestly, that's something where before you were getting great bookings, but maybe not as great revenue growth on that key line item. And so the fact that we got the inverse of that, I actually view as a positive. So I do think that they just have to keep doing what they're doing, and the stock will continue to work.
Call is coming up, Alex. You would expect Larry and Safra to be on it. What would if you have the opportunity, what would you ask them?
Well, I think the big question is, when do some of these use cases in generative AI for the enterprise that are driving the kind of demand for GPUs that we're hearing about, that we're seeing, where are they in terms of timeline to scale, timeline to revenue recognition, and the gains that are repeatable, that I think a lot of us want to see? When's that handoff from training to inference? I think is a question that I would not be surprised to see them talk through and talk about, particularly as you're hearing the approach, the scaling law question, whether we've hit a scaling wall. I think more so than ever, that handoff of training to inference is very, very important to understand, because it gives confidence the durability of the growth rates that the company is talking about.
What about, Alex, the company's legacy software licensing business? What do you see ahead for that business?
Well, the opportunity is this portfolio approach, and you've seen it play out for Microsoft. When you start having this exciting opportunity with AI, it could catalyze a conversion cycle where you really start to be able to leverage some of that functionality, leverage some of that product velocity only if you actually migrate to the cloud version of their products. They have that on the infrastructure side with the Oracle database, and they have that in the application portfolio with products like Fusion for the ERP portfolio. So I think that there's a catalyst opportunity for them to unlock and modernize and monetize their existing customer base as they make that jump, not just to cloud, but to an AI-first product functionality.
Alex, always great to see you and have that instant reaction and insight. Appreciate it.
Thank you guys for having me.